Welcome back, guys. Today we're going to analyze Verizon, which should be a pretty easy analysis because Verizon is a very consistent business. Now we're looking at the 5-year chart. They are down 32% in the past 5 years. Maybe this presents a buying opportunity because they definitely did not keep up with the S&P 500. They're down a lot. Yeah, $38 you can buy them now. So they are a $164 billion company, pretty large company, and dividend yield of 7%. Price to earnings ratio of 14.6, so pretty low price to earnings ratio. That's nice to see. And yeah, if you guys don't know what Verizon is, they do telecommunications in the US. Statements, let's check this out. Their revenue has been pretty flat. They went from 126 to 134 billion, maybe like a 1% gain over that time, compounded. So very low growth. And they do have margins, like pretty solid margins and pretty consistent. Like I've seen 14% the past 4 or 5 years, other than last year because they had an unusual expense. Taking a look at their balance sheet, they have a lot of debt, so this is something we have to watch out for. Usually these telecommunications companies do have a lot of debt because they have to build out infrastructure. So yeah, the net debt of 171 billion is pretty high. We'll have to take that into account. In terms of cash flow, their cash flows are pretty much the same as their net income, sometimes a little higher because the net income has a lot of impairments sometimes. But what are they doing with their cash? Well, they basically pay it all out in dividends. Otherwise, they keep some cash for the balance sheet and to pay off some debt. So let's take a look at their stats, take a look at their margins so that we have this down. Yeah, their gross margin is really nice. Operating margin is very consistent. Their net margin, I'm going to average that out at 14%. They've got 1 year, 24, 12, 14, 14, 16, 15, and then last year was 9. Maybe they could get back up to 15 or 16% margins, but with their amount of debt, and they took on a bunch of debt to do 5G, I'm going to say 14% moving forward. Let's take a look at the analysts think. Well, the analysts think that we're going to see $4.6 a share moving up to 4.72 next year, and then 134 billion going up to 137 billion, 2% increase, basically just keeping up with inflation. Let's check if they're shorted at all. Short percentage is only 1%, so that is a green flag. Not too many people short in this company. Let's check out the valuation model now. EPS, I put the estimates here. Buybacks, they don't do any. Net debt of 172 billion, discount rate of 10% because I want a 10% return on all of my stocks. Exit multiple 15. That's kind of what they're trading at right now, 14.6. And I think 15 is fair for this business, which is pretty consistent, but is very competitive, and they do have a lot of debt. So I think 15 is fair. In terms of growth, I just have 0%. And in this case, they're worth $56 a share with just zero growth. But they do have some debt. So if you account for the debt, then their fair share price falls all the way down to 15. Usually with telecommunications companies like this, the debt's not really a huge issue. I mean, eventually it will have to get paid off though. So I'd say the fair share price is around where they're trading right now, at $39, because of course it's going to be somewhere in between these two numbers. So yeah, I'd say like $40 a share is probably pretty close to a fair share price for this. And also with the revenue model, I put zero growth in their revenue with 14% profit margins. And here we can see it's very similar to the earnings model. Now, definitely it's possible that this company grows by 2% a year, just keeping up with inflation. And let's see how that changes things. Well, in this case, then we could see that their fair share price, yeah, like right in between the two is like $40 a share. And I also think that this is pretty likely scenario for Verizon. So it's an okay business, but also I don't really like their chart. If we take a look at their chart again, their all-time chart is pretty choppy. Like, yeah, you can see it's been pretty much flat over the past 24 years. And I'm not really a big fan of charts like this. So Like you might be getting them at a deal here, and they'll probably go back up to $60 at some point. But I don't really know what time that's going to happen. And yeah, like you know what's going to happen with this business, and probably not a lot. You'll collect your 7% dividend, and that's about it. So yeah, that's what I think about the business. Let me know what you guys think in the comments. Make sure to hit the like button. And if you want to try out the spreadsheet that I use, just make sure to check out the description. I leave it for anybody to use for free. So yeah, I'll see you in the next one. Peace.